Hi, I'm Brandon Poe, founder of Poe Group Advisors and creator of the Accounting Practice Academy. You are listening to the Accountant's Flight Plan podcast, where we talk about stuff in the accounting world. If you're looking to buy or sell a practice, we are the premier accounting practice intermediary firm in the industry. Check us out at pogroupadvisors.com. If you're a firm owner looking to build a more profitable practice while actually reducing owner hours, sign up for our practice management workshop, which only runs a few times per year. Learn more at accountingpracticeacademy.com. Welcome to the Accountant's Flight Plan podcast. I'm very excited. I have a guest, and I don't believe I've ever spoken with someone that's got quite the career background that Patrick has. Patrick Dichter was not a trained accountant, and he bought an accounting firm 18 months ago. And since then, he's tripled the revenue and bought 2 more firms, which is a really impressive acquisition timetable. Prior to his first acquisition, he spent 10 years working with small businesses. Was a sales manager at a digital marketing startup for 7 years, and then did small business advising and coaching for 3 years. Meanwhile, he continued to refer out the bookkeeping. Eventually decided to explore buying a firm. You searched for 11 months and you bought Apple Tree Business Services. Patrick's also married and has 3 young boys, lives in New Hampshire, and loves to fly fish. I like to fly fish too, Patrick. It's really active fishing. It's not boring. Much like your career, it sounds like. Not boring at all.
It's been a winding path. So thank you for having me, Brandon. I'm really looking forward to this conversation, and appreciate you having me on.
Yeah. Well, so at what point did you go, you know what? I'm going to buy a firm. Like, that's what I need to do. I mean, you had a sales background, digital marketing, but I can see where the business coaching and advising really ties in with accounting firms. Is that sort of at that point, did you realize, like, was there when did the light bulb go off to buy a firm, I suppose?
Yeah, it was kind of a little bit of a light bulb. And then as I explored it, the light bulb got brighter, if you will. So I've always loved working with small business, and I went from sales to coaching and consulting because I thought it might be a good path to learn more and maybe eventually, get into running a business or buying a business, or maybe small scale private equity, right? And I really enjoyed the coaching work that I did. It's a great company called Cultivate Advisors. And what would happen repeatedly is most of the new clients that we'd come in, try to work with, they had terrible bookkeeping, and we would refer it out, and it was like transformational. Suddenly they had the data we were looking for, and we could plan cash flows and see what their margin was, and help them understand the different levers in their business, right? So I started to hear about these people who buy small businesses, and I was like, I'm sure referring out a lot of bookkeeping. What if I bought an accounting firm? And the more I explored that and looked at it, the more I loved the idea. And I'd spent 7 years at this digital agency, and we grew that from 0 to 35 million in annualized revenue while I was there. And there's a lot of things that are similar about marketing agency in an accounting firm, but there's a lot of things that are better. Like, clients are stickier, staff is stickier. Competition is less fierce than marketing, I think. So that's kind of where the light bulb initially went off. And the more I looked at it, the more excited I got, and then eventually just decided to commit and go for it and find a firm to buy. Wow.
So tell me about the firm you bought. Like, how many team members were with that firm?
Yeah, at the time, prior year, it was doing 1.2 million in revenue, and there were 12 team members. And prior owner Steve had done a really good job of getting himself out of a lot of the client management. So most of the clients were on a monthly, subscription that included bookkeeping and tax. So primarily focused on small business clients. And there were 3 accounting managers who kind of served as the main point of contact, and owned the client relationship. And I think he only had about 2 clients that he worked with himself. So,
wow. And you have no tax background whatsoever, is that correct?
Correct. So
you kind of understood bookkeeping, understood coaching and consulting, and that side of the business probably very well, and you understood how to grow a business with your marketing background and sales background.
Yep.
But so how did you assess the talent and your ability to keep that talent? Because quite frankly, if you buy something and you're not aware of how to operate in that way, if you lose those people, then what? Right? Like, how
Right.
did you deal with that potential danger, if you will?
Yeah. So when I initially started looking, I was looking for pure bookkeeping firms. And there's just not that many that are big enough, right? I was really looking for something that was over 500K in annual revenue. And you just don't see that, right? They're either much smaller, or the ones that do get that big, they don't sell because it's a great business, right? So I had one under LOI that was about 800K in revenue, and that deal fell apart. And as I started to go look again, I became more open-minded to the tax work. Initially, I was kind of scared of the risk or the compliance side, but they're bigger firms, and I saw these firms that still had tax pros that would stay in post close, where it wasn't just like the owner who's the only person signing off on returns. So that made me more open-minded and comfortable with the idea. So yeah.
And then you went and made 2 other acquisitions. Is that correct?
Correct. Yep.
So, tell me what that timeline was like. So you bought your first one 18 months ago, and then when did you acquire the second firm?
Yeah, closed on the first one December 31st of 2021. So like a true accountant, Steve wanted to, start on a clean break of a new year. And the second one actually approached me. We were in an association together. It was a very similar firm that was smaller. Started talking in May or June, closed that deal in August, I believe. So it was like 7 or 8 months after the first one. That was an easy tuck in. And then the other one, I was still perusing sites and brokerages. And I do want to give a shout out because Poe was very great to work with as I was looking at deals. I think I submitted offers on 2. I dealt with Carol, and Poe Advisors was the one brokerage that was more open-minded, and the rest of the brokerages just wouldn't want to deal with me. So I appreciate that. So I was still scouring sites, and there was another one that I found that they were listing it themselves online before they started to use a broker. And that one was about 750K in revenue. And we closed that, I think, October 1. So that's kind of the timeline.
October 22.
Yeah.
Yeah.
So
wow. That's quite impressive that you were able to manage those acquisitions and try to integrate 3 firms together. Like,
integration sucks. It's messy.
Yeah, I mean, all the different cultures and different ways of doing things and trying to manage change. So, well, that's awesome. So, you mentioned you're not a CPA. You didn't even have any tax background. And now you've built a nice firm. And it's funny because you and I had a conversation prior to this about sellers being open to non-CPA buyers.
Yes.
And the way we work is, we provide options to our sellers, right? We say, okay, here are these buyers. And they obviously, if they don't want to talk to them, they won't. And if they do, they do. That's just sort of how it works. So I personally believe that, especially in this new world that we're in with virtual firms, and are all the firms that you bought virtual, by the way? Did you buy virtual practices?
You bought
a mix. So why should, if I'm having a conversation with one of our clients who's selling their firm, and I have a non-CPA candidate, why should that owner be more open to talking with a non-CPA candidate?
Yeah, I love this. My goal today, if nothing else, that your sellers and some of your audience becomes more open-minded to a non-CPA buyer. I wrote some notes down. I think there's 4 main reasons why they should be more open-minded. Number 1, the good CPA firms don't need to buy you. That sucks to hear, but like a good CPA firm is drowning in leads already. They don't need to go do more acquisitions, right? There's so much demand right now. Like a well-run CPA firm has as much business as they want.
They may not have the talent. They might buy you for talent. That's the only thing I would say.
Yeah,
is
fair.
Good talent.
That's thing
Or,
one, like,
or a vertical that they want to get into. So just
all right.
just to
So
counter
that's
that just slightly.
all right. I'll take your counters on each of these. Point 2, a non-CPA is likely to be better at working on the business and not in it.
Yeah.
Right. So with myself, like my greatest strength is my greatest weakness. I can't get pulled into the day-to-day. Like I can't roll up my sleeves and like knock out tax returns for our team. Right. So that's a weakness for me. The upside of that is like me and many other non-CPAs will be really good at like looking ahead, hiring, working on systems, like working with people, updating tech. So
I agree with that. I agree with that 1,000% because, when we coach CPAs in our academy, Accounting Practice Academy, most of what we're doing is trying to pull them out of those day-to-day weeds.
Mhm.
Like if we can get them to be more zoom out and really think about the business, like you're just talking about, their firms they take off and they in such a positive direction.
Yep.
And it's not taking off in a way that makes the owner work more. It's actually everything gets easier as they grow.
Yep. Cool. So point number 3, why I should be more open-minded. It opens up a really big pool of potential buyers. So there's this whole movement of people who are wanting to leave corporate America and go buy a small business. And they're trying to buy an HVAC company or a tree service company or, kind of a classic, like boring business. And a lot of them are going, hey, accounting firms would be a great thing to own. And, there's a lot of people like me who are like close to accounting that are interested in this. And I take calls from them all the time. So there's a few people who've gotten to know me through podcasts or through Twitter that are like, hey, here's this non-accountant, like, let me pick his brain. And I literally take 2 or 3 calls per week from people who are non-CPAs trying to do something similar and buy a firm, because they see that it could be a good, solid small business to buy. So again, if you're selling, I think one of the things you can do to like find your ideal buyer and get the most money for retirement is like open up a big pool, right? So there's a good big pool of legitimate buyers who are non-CPAs. And if you're just disqualifying all of them, I think you're cutting out a lot of the potential buyer pool.
Yeah. I love all those 4 points. And I think
Well, that was 3. There's
sorry. Yeah.
So 4, you kind of alluded to this, but in all likelihood, this is going to be their first acquisition, right? Acquisition 1 will go much better than acquisition 4. So what I mean by that is like a non-CPA buyer, they're probably coming to you and like they're making their first purchase and this is going to be their baby. They're going to do a really good job of like running that firm, getting to know it, right? Whereas if you sell to a strategic firm or somebody who's like on their 4th or 5th or 6th deal, it's much less likely that like they're going to take as much care and like handhold every employee and handhold every client. What they're going to do is they're going to say like, cool, welcome to our world. Here's our tech stack. Here's our process. Like, here's our team. Oh, 20% of the team is redundant. Bye. That's just the reality that like, if you sell to a person like me and it's their first one, they're probably going to take much great care than a regional firm or strategic that's like trying to smash together a bunch of firms and you're just another deal,
Right.
So
Yeah. Capacity. That is one of the things that we tell our sellers really look for. Does the buyer have proper capacity to focus on the firm and do a good job with it? So you mentioned your first acquisition. I think you said his name was Steve.
yes.
And he had kind of done a good job of getting the firm less owner dependent. what can firm owners do that would more easily make their firm attractive or make their firm more attractive for a buyer that doesn't have that background? Like what were you looking for when you were looking for your first acquisition? I mean, you mentioned you had a pretty good tax team, so you weren't worried about them leaving, so you knew that was covered. Like what else were you looking for? Or what maybe even like what were some of the firms that you decided not to pursue?
Yeah. When I talk to people nowadays, I tell them like, here's the need to have and here's the nice to haves. So I'd say like, you need to have a firm that has at least like 25% of revenues bookkeeping, because that's going to tell you that it's more business focused. It's got year-round revenue. Thing two is like, there's at least 2 other tax pros that would stay on post-close. So if the owner is the only one signing tax returns and you buy them out, like good luck, right? But if there's 2 other tax pros that will stay on post-close, like you're in good shape. There's at least 250K of profit or seller's discretionary earnings in the business. And that's going to tell you that it's like big enough, it's worthwhile enough to cover debt, SBA loan payoff or whatever financing and pay an owner, right? So those are the must-haves. The nice-to-haves would be like they do monthly subscription style billing instead of, getting paid after the tax return is done. They have people on a year-round engagement. They're more business tax focused than individual focused. They are more so cloud-based. I know on your website, you kind of have to do a black or white, cloud-based or not, but I think that's a spectrum, right?
Yeah.
So do they use, majority cloud-based tools? Are they majority virtual? Even if they physically have an office, like, are they, doing everything online and not using a lot of paper? Yeah, those would be like the nice to haves. Is like,
Yeah.
Have you looked at your practice the way a buyer would? It's easy to lose sight of the bigger picture when buried in the finer details. With the lessons within our latest book, How to Prepare Your CPA Firm for a Sale, you'll learn to build upon your firm's success and make your firm more enjoyable for you and your staff or a future buyer. Go to pogroupadvisors.com/prepare for your free copy.
If you own a CPA practice, you're no stranger to the grind. It's easy to get so buried in work that you lose sight of the bigger picture. Oftentimes, in order to improve, we need to change our point of view. Accounting Practice Academy by Poe Group Advisors gives you that fresh perspective, so you can achieve success on your terms. This virtual workshop gives you the tools and mindsets to grow your bottom line and make your firm less owner dependent. You'll use your firm's data to zoom out and see your challenges and opportunities with amazing clarity. Most APA members come to realize that pruning their clients and doing less will actually generate more income. Poe Group Advisors has sold hundreds of accounting practices. We know that the firms that are the easiest to operate are also the most valuable ones in the marketplace. APA is the only workshop built from that mergers and acquisitions perspective, which means our members build more valuable practices. Create a better practice for you and your employees to enjoy, or build it to sell. The choice is yours.
Okay.
Yeah.
No, I like it. It sounds like you've definitely put a lot of thought into that.
because I talk to people every single week. Yeah.
Yeah. I mean, you've got a quite succinct, very important list. I can't really disagree with any of those things. We've had a lot of people who are in wealth management that want to buy an accounting firm.
Yeah.
And I don't think I think just what you mentioned, having those clear criteria, would really simplify that for a lot of the non-CPA buyers. And you kind of touched on why people are interested in, but you mentioned there's a lot of people. I mean, you're getting a couple of people a week that you're talking to. Where do you think they're coming from? Are there certain places you mentioned, like coming out of corporate America?
Yeah,
like wealth management is one that we've seen.
there's a big movement. They're called search funds, or entrepreneurship through acquisition, right? So in a lot of the best business schools around the country, there's now this, there's classes that are being taught of kind of like a mini private equity model where kids will leave business school and they'll go search, part-time or full-time to buy a business. And they're looking for something that, meets certain criteria where it's recession resistant, sticky clients, good margin, light capital needed. And it's becoming extremely popular because a lot of people want to do their own thing, and also because the returns are really good and the lifestyle is good. So it started in the business schools and then it's trickled out from there. So there's podcasts about it, there's books on it. And I'm fairly active on Twitter, and there's like tens of thousands of people on Twitter who are part of this SMB Twitter community. And that's where they, hang out and talk about it. And that's where they find me and reach out.
Yeah. Awesome. And we're seeing a lot of private equity firms getting into this industry as well.
Yeah.
And you've got a shortage of CPAs coming into the marketplace.
Right.
So it kind of, what you're saying makes a lot of sense. And it actually could alleviate a lot of the problems that the industry is having with the staffing shortage in a way.
Maybe if,
maybe. I mean, if you get smart people who come in and automate more and systematize the business and kind of working on it.
Yeah.
Are you still doing a lot of coaching and consulting with clients of your firm?
No, I do a little bit, but there's, I added billable consulting work, and then there's a couple of us that do it in our firm. But I have a handful of clients, and then there's, a couple other folks that have a handful of clients, but we really lead with bookkeeping and tax and focus on that primarily.
Okay.
One thing I did want to hit on, if you're okay with it.
Yeah.
I think just how the business has gone since we've acquired them. I think that might be a good reason why people are scared, is they think that if there's any, retention that's part of the deal, that they're going to not get paid out. Right. So the first one, our revenue retention 1 year later was over 100%. It was 110%. The second one was 100%. And the third one was not as good. It was 78%. But I think any accounting firm, even if they're not in an acquisition, they're going to churn 10%, right? Yeah.
Typically not selling it, you're going to 5 or 10%. It's going to be a normal churn rate.
Yeah.
What did you do to kind of make sure your team was okay with your ownership? Like, was the team worried that a non-CPA was buying the firm?
Yeah, I think some of them probably still are.
So how did you address that?
A lot of what made this go well is attributable to Steve and what he did. And he was in a mastermind, and they would teach a lot of best practices that he followed. But there were a few things that really helped. We we had a consistent narrative that we told, and it was true, right? So he said, I sold the firm to Patrick, and he's not a CPA, so he needs to keep everyone in place. He's not going to change things quickly. And because he's not another firm, he's not going to let go of any of the staff. So we were consistent with that. I made sure to not change anything quickly. I closed right before tax season, so I kind of had to sit and watch and not disturb people too much. And then afterwards, I updated some things, tried to help people make more money and work more efficiently. And I think some of my team probably wishes that I would slow down on some of the growth or some of the change, but I tried to run it by them and get their buy-in and explain why we're doing things. And everybody is making more money and the benefits have improved. And I think our team has gotten stronger, but really it was not messing with things early on, leaving it in place, trying to build trust and build relationships with the core team. It's not broke, don't fix it.
Yeah, and focusing on those relationships, realizing that they're important and focusing on them. And because I do think I have seen a couple of deals where I had I mentioned wealth management. I had a wealth management firm by a CPA firm, and they put all their, I think they really put all their bets on the seller to stay in and stay on. And I told them at the time, like, you've got somebody who has decided to sell their firm for a reason. Like, they don't want to do this anymore. And so you can't bank on them staying.
Right.
Even if they say, yeah, I'll stay for a couple of years, are they going to are they really going to stay on in a positive way if they
Right.
don't want to be there? And in this particular case, the selling CPA exited before the wealth management firm really wanted them to exit, and it was a little bit of a disaster. So what in your deals, what has been the prior owner's ongoing involvement?
So the first one, Steve, he's still part of the team. Early on, we didn't know if that was going to be the case. We said, all right, we're going to have this 5-month period, to work through the transition. After that, we'll see. And could have been where he just said, like, I'm out of here. But ended up being that we get along pretty well. And he's, still really enjoys the work. He's healthy. He's awesome. He's super efficient. And the team likes having him around. So we're basically, like every 6 months, we kind of reevaluate, like, okay, what does your role look like now? What should this look like? The other two weren't like that. It was like 90-day transition for the smaller one. And then the third one, I think we did like a 4-month transition. And then they were actually younger guys that wanted to sell the firm, and they just wanted out of public accounting to do, different industry pursuits. So it's been a mix of those transitions.
Well, that's good that you were kind of open to you weren't counting on Steve to stay many years in order for you to make this work. You were counting on the team more so than the owner, which I think is smart. Do you find that now that it's a little bigger, it's getting easier?
No.
Well,
is it easier? It is a little easier. Yeah.
I think it does get easier. Like, as you get up, I think, I don't know if this is still valid because inflation, but I had a buyer who owned 9 different offices, and all of them were over 5 million in revenue. Wow. And he only wanted to look at deals that were over 5 million. And I said, well, this has been years ago. I said, what's the magic about 5 million? He goes, everything gets easier when you hit 5 million. He's like, if you lose a tax person, there's other people that can cover. You never get pulled back into the weeds.
Yeah. My initial reaction of no was, I was thinking, like, I'm working just as hard, but it is easier. We have more redundancy. We have, more processes. We have good people, right? We've experienced a little bit of turnover, and we're able to handle that better. So, right now we're recording, in August, but we're still trying to do a couple big tech migrations this summer. So, that's still a big lift.
Yeah. And so also you mentioned you're growing organically quite well too. What's working with organic growth for you, for your team?
Yeah, I think there's a lot of low-hanging fruit that we, have done, and we probably grow by 4 to 5K in monthly recurring revenue every month. So, focusing on our Google reviews locally is huge. Modernizing the website and having a Calendly button there in case anyone wants to book an appointment right away. They don't have to call in. We're fast on any lead that comes in, so we try to talk to them and get a hold of them right away. We have a 2-step call process, to kind of do intake and discovery, gather some info, and then a follow-up call is booked, and we'll present a proposal. We productize our offering, so it's like, it's going to be bookkeeping and tax. We'll handle your bookkeeping, your business taxes, your personal taxes. It's going to be between $700 to $2,000 per month. That's what we do. And here's why it's a benefit to you. And if people want just tax or just bookkeeping, it's like, nope, that's not what we do. So just being disciplined in like the type of clients that we want to work with. Yeah, I mean, if you're listening to this and you have less than 10 Google reviews, like just go get 10 or more Google reviews and it'll put you well on your way.
Yeah. Yeah. That's great. Let's talk about surprises. I mean, I'm sure you had a few here and there. Let's talk about the bad ones first. What are the sort of the bad surprises that you encountered?
Try not to sound too negative, but the change management is so hard. I've been in leadership roles before, and it is so hard to work with accountants and say like, yeah, we're going to change this software, or like, we're going to take on these clients, or like, we're hiring these new team members. So it's a really, I've had to learn to like slow down and get buy-in and like run ideas by people, and also just accept that like sometimes I'm going to be a little bit of the bad guy, but I think that's where we need to go as a firm. And sometimes later on they're like, okay, this is better. So that's been one of the tough surprises, is just how hard it is to drive change when I think it's needed.
Yeah. Yeah, we see that. And
another
really,
big surprise
it's really
is
hard
not
with partners. It's really hard with partnerships. You add several partner layers to
I
that,
bet.
and then it becomes impossible
Yeah.
sometimes.
And honestly, right now I kind of get it, because you get through a tax season and it's such a meat grinder, right? You come out, you just want to catch your breath. And it's like, should we probably pick this new practice management tool? Yeah, we probably should, but then you just know how much work it is, and like, right. But before you know it, then it's like October, November, December, you're into planning, and like the next tax season begins. So I can totally empathize with why that happens. But we're talking surprises. Another big surprise is just like how gray tax is to me. I thought it'd be like more black and white. And it's so gray, the way different tax pros will interpret certain things or what they'll do with clients, so that's been a big learning. So
What about on the good side? What are the really good surprises that you encountered?
a lot of the things that I thought initially with my business plan have kind of been accurate. Like, small businesses are so underserved, so it like, especially around the like, 100 to 300K revenue mark, they need so much help, right? Like, that's when they could maybe do an S election. That's when they probably have payroll. That's when like, they need to have their compliance really tight. Maybe they're trying to get financing to like get to the next level, right? So in a good way, it just feels so good to serve them well, and like see the feedback that we get from our clients and how appreciative they are. The core team that we have is great and really strong. There's some really good procedures here. The association and the mastermind that Steve was in, that I've plugged into, has been amazingly beneficial. People are so helpful, like there's a lot of different accounting communities that will share like feedback on software, or like, tax situations and things like that. And that, I mean, there's so much opportunity at accounting right now. It's crazy.
Yeah. So, well, I love what you're doing. It sounds like you're building a firm that really a firm of the future, where you've you've got the bookkeeping and the tax, but you've got the advisory right there, and you're really helping these small business clients that need it. And I've said this many times on this podcast, like, there is so much opportunity, and there's so much opportunity to do high value, really impactful work. And if people can just get out of their own way and make that happen, like, it's there.
Yeah. Amen.
So
it's there, and people will pay for it.
Yeah.
Not everyone will, but enough people will, and it'll be enough that you can pay your staff well, and have a little bit more work-life balance. So.
Yeah, exactly. Well, I'll change the subject really quickly. I always like to ask my guests about a book to recommend for our listeners. Do you have a book you can recommend?
Yeah, I was thinking about this. I love the book Essentialism. It's been a couple of years since I've read it, but just really boils it down to, like, if you cut through the noise, like what is the one thing that you need to get done this week, or what's the one big initiative that you want to move this quarter? And whenever I come back to that or reread it or listen to podcasts from that author, it's just refreshing to, be able to put the blinders on and tune out the whirlwind, if you will.
Awesome. All right. Well, anything else you can think of before we wrap up?
No, thank you for having me. This was a fun conversation, and I appreciate, what you do as a broker. It's, a hard job, and I know it's probably a long cycle of working with clients. And when I was on my search, Poe was the one brokerage that was, more open-minded and good to work with. And hopefully this just opened the conversation a little bit further for your clients and your team.
Well, thank you for the compliment to my team and to us. And thank you for coming on. This has been a great conversation. I don't think I've met anyone who's done what you've done and had this kind of conversation on the podcast before. And after talking to you a little while, I can see why you're doing this very successfully, and you've definitely been intentional about your acquisitions. And so I think what you're doing is great. What is the best way for people to follow you online?
Yeah, you can connect with me on Twitter or LinkedIn or through our website, but Patrick, and then my last name is Dichter, Dichter. And would love to connect and chat with people. And there's other people like me that are non-CPAs out there. So we're out there.
Awesome. All right. Thank you, Patrick.
Thank you, Brandon.
Thanks for listening to the Accountant's Flight Plan podcast. If you like what you heard today, please follow us so that you can get updates when new episodes are released, and share our podcast with your friends and colleagues. You can also follow Poe Group Advisors on social media. Please visit our website for more information at pogroupadvisors.com.